Hello, chart watchers, and welcome to this Thursday, February 1st, Market Watchers Live show with your hosts, Tom Boley and Aaron Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look first at what's going on today so far. You can see that the Dow Jones Industrial Average, after starting out early to the downside, they have recovered. You can see the Dow Jones now firmly up into positive territory, the S&P 500 following suit, and both NASDAQ and the Russell 2000 also moving into positive territory, although you can see once again the Russell 2000 is lagging. Money is rotating away from the bond market once again. The selling in the bond market has the 10-year Treasury yield up another 3 basis points to 2.75% today, just one day after the latest FOMC announcement. Leading the market today to the upside, technology up about almost 2/3 of 1%. The XLK leadership there is coming from the Internet group. Internet stocks, you can see up 34 points or about 2% today. Facebook having a great post-earnings run here. They did top the expectations in terms of both revenue and their earnings per share, and you can see that the stock is being rewarded here. Financials also doing well, of course, with that 10-year Treasury yield moving higher. You can see that it is taking the financials up with it. Insurance brokers, pretty interesting chart here. This is the DJUSIB. We actually had a pullback in this group just recently, perhaps putting in an inverse right shoulder. Looks very bullish. And within this space, Marsh & McLennan, MMC, reported earnings, and they are performing quite well. Gapped up, pulled back, and now starting to run again. The laggard today has been so far materials. The XLB, as you can see, lagging the other major sectors, down just a little bit more than 0.75% at this point this morning, although it has rallied off of the lows from earlier today. And with that, let me bring in my co-host, Aaron. How are you doing this morning, Aaron?
I'm doing quite well. Thank you very much. After a lovely birthday at Disneyland, how can you beat that?
That sounds like a lot of fun. I'm an amusement park kind of guy, so that would be a very good place for me to go. There's probably some listening right now. They're like, okay, forget about the roller coasters. I'm not interested. But I actually enjoy going to the amusement park, so I think it's a pretty cool place to go for your birthday.
Oh, yes. And we love to do the people watching and all of that. So it was very nice. I really enjoyed it. And so, yes, now back to non-birthdays days. And now we're looking at this market that's crazy. I mean, I was, I had all these news bulletins flashing on my phone, Dow, down, and now we're back in positive territory.
Yeah, it doesn't take much these days to get the buyers back in. And we're going to get into all that in a couple minutes. But first, I do want to bring in our guest. He is returning back, Bruce Fraser. How are you doing this morning, Bruce?
Good morning. Hey, it's great to be with you guys.
Again, I know we had a great visit last time. I'm looking forward to seeing what you think of the market right now. And also, I'm looking forward to you telling me that it's still snowing out there.
Well, I escaped the snow.
So you did?
I did. So I'm in a sunny place. So,
okay.
Yeah. So just for my sanity.
But normally, I mean, you live in Utah, you said, right?
Lake Tahoe.
Okay, Lake Tahoe area.
Yeah.
Beautiful area.
Yeah, and they were getting some good snow. So I just wasn't there to appreciate it. But I'm appreciating it from a distance.
Yeah, I'm appreciating it from about 2,000 miles away, which is exactly where I want to appreciate it from.
Yeah.
Amen. Amen.
And Aaron, a belated happy birthday.
Well, thank you so much, Bruce. I appreciate that.
Yeah. So
yeah, I'd like to say this is still her birthday month, but we actually switched over to February, so I got to come up with something else.
Yeah.
Last day of the first month. That's how I tell people to remember it.
There you go. Well, we got a bunch to get into. We're going to come back to you, Bruce, here in just a few minutes. But first, maybe go through the announcements and the agenda, Aaron. And we'll get this next party started.
Indeed. Tomorrow, I'm going to be doing my workshop on sifting scans. I'll show you what to do when you get that just plethora of scan results and how to get through those and find the best investments. Chip Anderson is going to be with us on Tuesday to do everything stock charts. So we look forward to having our president in the House. And Gordon Scott will be our guest on Wednesday. You may know him from the CMT board, and he's at Investopedia. So it'll be interesting to have a talk with him on Wednesday. And that's what we've got scheduled for the upcoming schedule. But what are we doing today? Today, we were going to start with a scooter report. I'll give you a quick rundown on which stocks right now are running as far as scooters. We have Bruce, of course, coming in here. I know we're going to talk some Wyckoff, of course. And 10 and 10 to 1, we have our first symbol, and it will be the Gold Miners ETF, GDX. We get this request quite often, so we decided to do it first. And then finally, we'll finish off with Anatomy of a Trade like we do on every Thursday. And I happen to know, I believe Bruce is going to be giving us an Anatomy of a Trade. So that'll be very interesting. Stick around for that.
All right. Well, let's jump into the action then. First, I'm going to pull up the 10-year Treasury yield so everybody can check that out. And you can see that we are up near the high. I'm going to refresh just to make sure I have the absolute latest here. But yeah, we are sitting right now at 2.75%. And you can see this would represent the highest close. We are still battling yesterday's intraday high. Of course, we had a really big move up in the afternoon yesterday after the FOMC announcement. And I think a lot of that was, I think some folks got a little bit spooked because they did mention that inflation, that in previous meetings, I think they had wording, and I'm paraphrasing, so I may not get this exactly right, but they talked about that the inflation expectations would be below the 2% level. And they made a little bit of a subtle change there, effectively saying that they think inflation is going to be on the rise later this year, and that we could see that 2% level touched. And they just gave a little bit more warning about inflationary expectations. And if I pull up this intraday, I'm going to do a 10-minute, 5-day chart. Check out yesterday at 2 o'clock. The move that was made right after the announcement. It did come back down and settle down, and now we're going back up and essentially maybe putting in a double top. We'll have to see whether or not we pull back off of it. So far, you can see that we are. But let's get back to that daily chart while I go through some of the economic reports that came out this morning. Initial jobless claims, of course, that comes out every Thursday. 230,000. The market was expecting 235,000, so a little bit better news there. Q4 productivity actually came in with a little bit of a dip, minus 0.1%. The market was looking for a gain of 1.1%. So came up a little bit short on the productivity. January PMI manufacturing index matched expectations at 55.5. And then 15 minutes later, January ISM manufacturing index came out a little bit hotter than expected, 59.1 versus 58.6 expectations. And finally, December construction spending up 0.7%. The market was only looking for 0.5%. So I thought that was kind of good news. But here's the 10-year Treasury yield, and you can see that this is another high. This is the highest level we have seen the 10-year Treasury yield since the end of 2014. I thought we took out key level back at 260 to 262. Said at that time I thought we would be making a move up to test the 3% level, and I think that's where we are heading. Maybe even a little bit above that, 3 to 3.5%, depending on how you draw that long-term 35-year downtrend line since the early 80s. But it comes in somewhere in that 3.5% area, and it certainly seems like that is where we are heading, at least to 3%. I think 3.5% is possible, especially given some of the talk by the Fed and a lot of expectations at this point that we'll see some more rate hikes later in 2018. But let's take a look at a few of the charts that I just mentioned briefly a minute ago. First, the insurance brokers. Now, on the daily chart, you can kind of see this move up. This is, I'm going to show you weekly in a minute, but this would be your left shoulder. Here is the left side of the neckline. Here's the head. We moved all the way back up here to put in the right side of this neckline, slightly above the other side, which I like. And then we pulled back, and so far we have an inverse right shoulder that is slightly above, although I would give this room down to that rising 20-day. Now, that's the daily look. When you look at a weekly chart, you don't really see the inverse head and shoulder nearly as easily because it's happening pretty quickly. But here's a beautiful uptrend. So there's no doubt we have an uptrend in play. So these continuation patterns are certainly worth at least monitoring. The pullback here to the rising 20-week moving average did establish a left shoulder. The bounce back up puts in the left side of the neckline. Here is the move down, and you can see this actually is a pretty good area of support that it came back down and tested, put in that hammer, rose back up. You can see the right side of the neckline, and now this week the pullback isn't quite as clear on a weekly chart, but you can see this pullback, I think, establishing a right shoulder, inverse right shoulder. And again, I think we could go down to the 20-week moving average, which right now is down at 299. That would be an area that I would be watching pretty closely. But I think this is a bullish continuation pattern after an uptrend, which I look to see resolve itself to the upside on a breakout. And I would say that breakout above, let's call it right about 310, 311. We go back to that daily chart and get a better look there. But yeah, maybe 310, 311. I think 311 is probably a good look. But a breakout above that would then measure up probably about 25 more points. So I'm going to say maybe the 335 to 340 area. That's a pretty good move on the insurance brokers. Now, one of the stocks in this group that did report some pretty solid earnings, Marsh & McLennan, MMC, you can see a similar type pattern, not quite the same, with this being like the right side of that neckline compared to there. So you can see this on a relative basis actually has been performing pretty well. But look at the volume today already. The volume is 2.1 million shares. We're not even to the halfway point of the day. So it looks like we could be putting in the highest volume on this stock that we've seen in the last 6 months and potentially a breakout. We need to watch these levels up here to the upside. But I think MMC looks pretty interesting at this point. One group that was very interesting earlier, XLU, tried to get through the 20-day, and it's been trying. This is the utilities, and it's been downtrending. This has been the worst sector by far over the past couple of months. It's trying to get back through that 20-day moving average, so far unsuccessful. We have seen a little bit of a momentum shift. The XLU has seen its PPO cross over its trigger line, but it is well below the center line still. So you have a downtrending stock or ETF that's trying to make a turn here. I think a breakout above that declining 20-day moving average would be the first step here. So the XLU, let's keep watching that 20-day moving average, see if it can get through. Now, one area that I had mentioned a while back that had quite a bit of ways to go to the downside on a weekly chart. Now, you look at the daily chart, and it's pretty easy to get somewhat bearish on this group because after 3 or 4 months of trading exclusively above its 20-day moving average, you can see that on the most recent high, these higher prices have come with lower PPO readings, negative divergence, and now we're starting to see breakdowns below some key moving averages. So it would be easy for me to look at this daily chart and be very bearish in the near term. But when I look at the weekly chart, this kind of weakness is exactly what this group needed. It had a almost parabolic move over the last quarter, the fourth quarter of 2017, opened 2018 pretty strong, but I think it has had just a normal pullback to a rising 20-week moving average. The 20-week moving average was 888. This low this week, 887.72. So literally came right down, tested that rising 20-week moving average, and so far it is bouncing. So completely different picture when you look at the weekly versus the daily. Again, the daily looks like things are breaking down, but we could be getting a reversing candle on the daily just as we're testing major moving average on that weekly chart. Just something to keep in mind. The Russell 2000 I'm going to pull up. I mentioned this one in my blog this morning. I think the Russell 2000 is getting close to a pretty key area of support. You can see the breakout here that came out above the 1560 level. We have pulled back a little bit below that 20-day moving average, and we got down to 1568 earlier today. But I've got an interesting fact, and I meant to say something about this yesterday, and it just kind of slipped my mind. It was in my blog from yesterday, if you read that. But the Russell 2000, the average annualized return, or the annualized return for the Russell 2000 small caps from the 25th of the month through the 5th of the month. So basically, it's about a 10-day window. The annualized return for that period is 27.80%, going back to 1987. So we're talking about 3 decades, pretty significant amount of time. If you get outside the 25th to the 5th, from the 6th to the 24th, the Russell 2000's annualized return is 0.38%. So again, if you take a look at almost 2/3 of the calendar month on the Russell 2000, dating back to 1987, it's gone nowhere. I look at these stats sometimes and it just amazes me, but the 25th of the 5th, and keep in mind that's when the market anticipates money flow coming in, and then the money flow actually does come in. But the Russell 2000's performance throughout the calendar month is really pretty impressive, I guess. I'm not sure if that's the right word. Certainly it's more volatile, I guess, when you get beyond the 5th of the calendar month. So anyhow, it is the first of the month. We are in a period where the Russell 2000 tends to do well, and you can see that the end of January was not very good. So perhaps we're going to see a move here in the Russell 2000 just after it neared that price support level. First step, it's got to get back up above that 20-day moving average. So with that, I am going to turn things over to Aaron, and I know you have a scooter report for everyone. What do you have for today?
Yeah, I thought I would go in and show you guys what's going on as far as the scooters are concerned. So let me do that for you right now. So there are a couple ways to do this. If I can get my screen to share again. I have no idea why it's doing this. Okay, hang on. Okay, everything works perfectly, by the way, before the show for like an hour and I don't know how long. So it's just how it works. Anyway, I wanted to show you the stock charts technical ranks. That's what we have. It's a ranking that we do exclusively at Stock Charts. And what we like to do is look at what the rankings currently are. And the ranks go from 1 to 100. In this case, the large cap universe is what we're looking at. You can look at the top 10, which don't change very often, and as well as the low 10. I like to look at what's making the biggest move. At this point, we can see QRVO. Lots of gap ups here on these particular scooters because, of course, we're seeing some major upside action, and that would be why you would expect to start seeing those scooters moving up. But if I'm kind of looking for something to maybe invest in or that might look interesting, there are a couple things I might do. First of all is put it in candle glance, just like this. And looking at these just right off the bat, AT&T is the one that sticks out to me because you have that breakout over those two tops right there. You could even make a case for a cup and a little bit of a handle here, and now it's coming off. And I could see my PMO is turned up and is giving me a buy signal. So I'm going to look at AT&T very quickly for you. So exactly, we've got this area of overhead resistance that's now finally been punctured. We got the nice gap up on that. Could be a breakaway gap, which is what I suspect it is. And there's that PMO buy signal. Of course, the scooter is running quickly higher, and that's why this came on our radar from that home page. So I like the looks of this one. And then there's another thing you can do. I'll go back here. And that is actually looking at our top 10. And, you know, these stocks we already know have a very high batting average. So what I want to do is look at the candle glance and see if any of these maybe are pulling back and now are coming back out of that. That could be a place to find some opportunity. So I just pulled up my candle glance. And you'll know mine looks different than maybe other people's. And it's very easy to set up your own candle glance. Simply save the chart style you want to show up on your candle glance. Save that style as candle glance, and that's what will show up. So anyway, this is the one I would pull up. I would look at this. I see a flag here, but I don't like the PMO. It's turning down. This one, we had that kind of a bull kiss on the PMO. I like the gap. Did pick up above that area of overhead resistance. Could be a flag. So Boeing looks interesting. And the rest, I'm not really thrilled with the PMOs on most of these other ones. And I don't see that great of chart patterns. But Michael Kors grabs my eye just because it has pulled back to that area of support that used to be overhead resistance. It's coming in right there. It's testing this high right back here, and it's going to be coming down. It could end up testing all the way down to 62.50. This is the first time we've seen it go below the 20-day EMA, But one of the things we do know is that it's, as far as its peers, it has a good batting average. Of course, as far as my discipline and as far as investing goes, I always look for a PMO that's turning up. I wouldn't jump into something like this, but I know for different trading styles, this is one way you might be able to go in and find things that fit your own trading style. So just because they're big movers doesn't mean they're necessarily the best as far as looking for possible investments. And I would definitely recommend not looking at the top down. You don't want to, yes, they may be pulling back, but they already have, you can see right here, they already have scooters below 50. I wouldn't be bottom feeding from this particular list personally. And with that, that's pretty much what's going on with our scooters. Like I said, I wanted you to see which ones were the top 10 for the large caps and then give you an idea of how you can use these scooter rankings for picking investments. And hopefully I did that for you. And of course, we did also look at, let's see, I think I popped up T for you and Michael Kors. So those would be the symbols to take a peek at. And with that, I'm going to introduce Professor Bruce Fraser, who happens to be here from Golden Gate University. He's a regular contributor here at Stock Charts, and he's well known for his Wyckoff, all of the Wyckoff-Wycoffian. He studies this, and he has crafted the curriculum, as you can see, and we love to have him. I always learn so much, and I know, Tom, you've kind of changed your trading style slightly as far as how you look at a few things now that you've started to get exposed to this more.
Yeah, I mean, it's always great having Bruce on, because I know, Bruce, last time you came on here, there was one stock that I owned at the time, Generac Holdings, GNRC, and we talked a little bit back at the beginning of January that this pullback and the fact that it lost 48 support could be a spring under Wyckoff, where you have that 1 day or couple day false breakdown, then all of a sudden it takes back off to the upside, and that's exactly what we saw with GNRC. So the timing of that was was rather impeccable, I might say. So I want to thank you first for that. But welcome back to the show.
Well, thank you, and it's great to be back. And we have lots. There's lots to cover. And so we can, it sounds like I'm going to get opportunities in the future to come on the show. And so we'll just keep sort of rolling through this material. And today, I thought, in the time that I have, I know we don't have a lot of time, but I thought what I would do is just do a little bit more on reaccumulation, which we sort of introduced the structure of reaccumulation last time, and then I'm going to introduce distribution. Now, people would ask, they'd go, well, why would we want to talk about distribution now? We're just in this great, robust uptrend. Well, I'm going to give you a couple examples about why it's good for us to have these tools in our Wyckoff toolkit. So let me take the screen here, if that's all right.
Yeah, and I actually think that the timing of talking about reaccumulation and distribution is probably it's ripe right now for talking about both of them, because we are in this period where we've had this huge move up. And I guess the question that we all really want to look at is, when we do have these pullbacks, is it reaccumulation or is it distribution? Big difference in where the market goes after that.
Oh, that's a really good point. And thank you, because I will try to give us some rules of thumb for the distinction, because the way that they both start is similar, but the way that they end is vastly different. So that's a really good point. And so here, I think we showed this schematic last time, but let me see if I can put this on a slideshow. How's that?
Much better, much better.
Oh, okay, so reaccumulation comes at the conclusion of an important uptrend, good, robust uptrend. And it concludes with what we call preliminary supply, which is a short, brief pause in the market that's typically a little bigger than what preceded it. And then with the crescendo of a buying climax. And so we get sort of an acceleration of prices that into a buying climax. And if we don't know that it's a buying climax, and we get better at seeing these things, because typically a buying climax comes with a really good volume, big spike in volume. Sometimes the biggest spike is on the preliminary supply, which shows when you see a big spike at the conclusion of an up move, oftentimes people interpret that as being bullish, but as an uptrend is coming to its conclusion, there's a big element of supply in that volume. And so this is supply that is going to stop the trend, and in the case of a reaccumulation, is going to result in a stopping action. And how we know this is with the automatic reaction. And you see here that the buying climax and the automatic reaction are characteristically different than the reactions that occurred before in the uptrend. And automatic reactions oftentimes come suddenly. They have a lot of volatility in them, and they are in many cases for traders, they're a big surprise. So automatic reaction, secondary test that follows. My mouse is a little. So here, secondary test. Now, what we do as soon as this happens is we draw a resistance line across the very high of the buying climax. We draw a support line across the automatic reaction low. And so we have, without seeing any of the trading that follows, we now have boundaries where the market or the stock is going to trade for some period of time out into the future. Now think how valuable that is, remarkably valuable. So once we develop an eye for being able to see that buying climax, automatic reaction, now we have a roadmap for the boundaries of price for some period of time into the future. And so this can go on for weeks to months. I have examples of reaccumulations that have gone on for more than a year, multiple years. So the other part about this is that we can do point figure counting, which I hope we get to talk about in a future get together. Is we can do point figure counts of a completed reaccumulation. It gives us projections for the upside of the next move. So here we see support, resistance. We see a series of secondary tests. Now the idea of the creek is that we have this sort of a meandering pullback where prices get up to resistance and then they try to pull back to support again. In this case, they can't get to support. This is the idea here is the evidence that we're looking for is absorption of shares, that the large informed interest, what we call the composite operator, is absorbing shares throughout this. And so the result in the trading action of absorbing shares is diminished volatility. This is an important point because in distribution, the opposite is occurring. In distribution, as you go through the formation, the shares are being sold by the composite operator, and that the result of that is that the stock or the index becomes more volatile over the course of the structure. I'll show you a schematic of that in a minute. So here we can see the case that there's this pullback, this idea of the creek, and then price sort of meanders down toward support, and then it jumps across what we call the creek, or jumps across that, and at some point we can talk about how to draw those, because it's not a moving average, It's actually a line that we draw on our chart. And so, and then once that jump occurs, we can see that the rally up to resistance and then out is of a vastly different quality than the rallies that occurred in the reaccumulation area. And that rally shows that the stock has been fully absorbed. Shares are scarce. It's difficult to buy. Institutions that want to own it find that the only way that they can get the shares that they need is they have to be willing to pay up, which drives the price up and out and into a new uptrend. And so that's the notion of a reaccumulation. So, and jumping with questions, yeah.
Hey, Bruce, actually, if you can go back to that slide again one more time, I actually have a couple questions for you. Number one, I don't know how closely you follow patterns. I know the talk, when you talk about reaccumulation and so forth, when I look at that as a flag pattern, a bull flag, where you have the flagpole and that initial move to the upside, and then this reaccumulation being like a flag. Is it fair to say that the two are similar? Or?
Yeah, they're the same thing.
Okay.
Yeah, they're absolutely the same thing. The only thing that we're doing is we're using we're creating a context. And the context is that over at the beginning of the reaccumulation, we're saying that stock is in weak hands, and this creates inherently high volatility. And that as the stock is being absorbed, see what happens in an uptrend is that the quality of the ownership from the beginning of the move to the end, the quality of the ownership changes. And so you go from strong hands holding it to where an uptrend sort of attracts a following, say, for instance, traders and momentum traders and so on. And so they are not going to hold the stock as long as the investors that come in in the accumulation phase or early in the prior reaccumulation. And so what happens is the quality of the ownership changes, and that's what helps to create the buying climax. And so now what happens is the stock, it continues to be a strong company with good internals, good fundamentals, good sales, and so on, is that the large informed interest, the CO, will start to accumulate shares in the reaccumulation, and the ownership starts to become stronger again. And so at the end of the reaccumulation, the stock is held by very strong hands, and they are not going to sell those shares until they get much higher prices to sell into. And so this is what happens in flags, pennants, all of these things. And the only thing we're doing is we're trying to create a narrative or a context for when they begin and when they end. And so when we look at the end of a reaccumulation, we're looking for classic characteristics of the completion of absorption, completion of buying, which helps us to have confidence that this new move is going to go for a long time. And
yeah, I'm one of those weak hands, by the way, that that you're talking about.
Well, it's just we have the ocean. I think of it as the ocean,
right?
And the composite operator is the apex predator, right? And so we're all down there, and we're just trying not to get eaten.
We all say.
so we're trying to do our job in our part of the food chain, the stock market food chain, and we're always on the lookout for the apex predator. So we all have a place in this. So
Bruce, somebody was asking, and of course I'm always interested in scans, but do you scan for stocks using Wyckoff, and how would you do that?
I do scan, and I've been scanning for a long time, and the scans that I do are looking for a combination of the change of character. So, for instance, you look at this area, jump across the creek, and you start to see the emergence up towards the resistance area, the scan is designed to pick that up and also to pick up relative strength. And so the scan is very focused on, because here's a good point. Reaccumulation, you have a really good stock that is a relative strength leader into the buying climax. By the end of the reaccumulation, it's a relative strength laggard. In most cases, it's fallen out of favor. And so this is a tactic of the composite operator, is to have it languish for a period of time, because traders are looking for things that are moving. The composite operator creates dull markets so that they can do their accumulation work or their distribution work.
Can I suggest that the next time you come on the show that you share that scan with our audience? Could you do that?
And then actually, if you could just copy and paste the settings, I can put them in today's recap, because I know everybody's going to want to know.
Well, this is actually a very old 20-year-old system that I have. So
okay.
we'll work. Let's just say this: we'll work on it.
Okay.
Well,
that's good.
Yeah, we'll come up with something good.
All right. One other question I had too, and in that creek phase where you're slowly, just kind of meandering beneath that line, and then all of a sudden you break above. Are you looking for lighter volume as you beneath that creek, and then are you looking for a pickup in volume as you break above it?
Exactly.
Okay.
See, these are just best practices. These are things that now. Typically what happens is, especially as you drive down towards the lows, towards support, you see these big spikes of volume as you get down towards the support area. And the thing we really care about is the volume off the peaks. So if the volume is coming in off the peaks where the resistance is, that tells us that there's a latent supply. There's a lot of supply. And so the question now, the CO is sort of a fiction. It's sort of this fiction that we work with because it's a collection of all the really smart, really big institutional types that are building positions. And so they know what they're doing, and they're very good at it. And so when you have a drive down of prices from resistance and the volume is high, that tells us that there's latent supply. And the CO looks at that and says that there's still too much supply in the market. Now they're accumulating that supply, but they're going to not be looking for a move up and out of that area until all the supply is absorbed. So what happens is you start to see those lows towards support, and at the conclusion of the creek, you start to see the volume diminish as you get towards the lows. But the attempts to get to support prior to that, the volume can be quite high. And it's actually a good thing if you see the volume high as prices get to the support area. So that shows that large interests are stepping in and buying stock at support. And but when you see volume just sort of diminish, and my case study that I have for later will show an example of that, and I'll make a point. I'll point that out there. And so in the case of the creek, the volume is generally diminishing throughout. And this is the final attempt to go down before the emergence of the new uptrend. So let's see if we have an example here. So here's some examples. So this is Amazon. It's a historical case study, 2015. This is from a blog, so you can go back and actually look at this blog. I did it real time at the time. Now it's historical. And so you can see the buying climax and the automatic reaction. So you can see that this reaction is much larger than anything that preceded it, at least that we can see here. And you look how high the volume is as it goes down. So volume is high on the peak, which is that first red circle, and right there. And then you can see the volume is really high as you go down towards the support area, Well, we draw resistance at the buying climax, we draw support at the automatic reaction low, and we can see how well those work out into the future. And so now we can see the how high the volume, look how high the volume is as we get right down to the lows. See, I would argue that that is the supply that's out there is being absorbed by strong hands. But what we need to see is we need to see volume diminish to demonstrate that that is in fact the case. So we see another attempt to go down these two bars here. Volume is quite high, a little bit of a rally. Look at how poor the volume is on the rally. So there's no demand on the rally phase. And the CO will not typically buy shares on the rally phase in reaccumulation because they don't want to drive prices up on themselves. They're not going to compete with themselves to get fill their positions by pushing prices up to resistance. They're going to buy on a scale down. So now look at the next decline from down to support, and you can see generally volume is not real high until the low bar, and then there's huge volume at the low bar. I would contend that that's demand coming in at support. And now the final attempt to go down, which I have labeled a test, the second test, the volume is lower than it was at any other period going down to support. Can you see that? My arrow is sticky. So right there, right there. So look at the volume. The volume, even though it pushes up, it's lower than the volume attempts going down. So that's sort of the way we have to interpret this. Now, this kind of pink line here is the creek. And so it's a meandering sort of supply line over the market. We draw it by hand. And what we're looking for is we're looking for evidence of a jump out. So we're here and we're saying, this looks like a test of a spring. And we're looking for a good jump above this downtrending supply line. And we get a good jump. We would attempt to buy these strong bars off the low. We may have even attempted to buy here, except the volume was so high at the low. I would argue when I saw this volume bar that the CO is going to want to test those lows again. They're going to want to know that the volume has or the supply has been absorbed, and that big bar suggests that there's more supply available to buy, and they're just going to keep buying until they get it all. And so here, this next low right here, you can see that in fact supply has diminished, and then look what happens. There's just this beautiful jump out of the off the support area as it goes up towards resistance. We label this a sign of strength. Now, here's a big tell, is look at what happens after the sign of strength. And the reason we label it this is because it goes above these peaks right here. And so then there's no correction after that beautiful jump. There's no correction. We should be getting very busy and buying shares on the way up to that. And also, we see this really nice sign of strength that goes out of the resistance area and then backs up. And look at that. There's no give back. It can't come back. The stock has all been absorbed. There's no point in the stock coming back down again. Demand is good for the stock, and once it's up and out, it just starts to trend. So just a case study. Mm-hmm. And you can see here, this reaccumulation is more than a year in length. So it took a long time. So anyway, how are we doing for time?
Oh, we're good. Yeah, we got probably another 5 minutes or so before we get into 10 and 10. So
okay, and so here are a couple more. These, and by the way, these the blog that these are in are listed on the bottom, so you can go back and look at them and play with the charts. Here's two reaccumulations stacked on top of each other in Apple. And so here you can see buying climax with a really nice gap in it, and then look at this big reaction, sets a range. This range goes from really October to March. And so a big pause. And to me, reaccumulations are very important concepts to master, because there's so many reaccumulations in a long-term uptrend. Many opportunities to buy reaccumulations in an uptrend where there's only one accumulation at the bottom. And so reaccumulations to me is where the action is. And so really nice case study here, big sign of strength that after a higher low on the secondary test, you can see there's still a lot of volume. It comes up and out, nice sign of strength, and then comes back down into the structure, cannot get to support, makes a higher low than the two previous lows. This is something that we really like to see. And so and we have an LPS. You can see that the volume is still somewhat high as it pulls back, but as the LPS is tested, it's tested here, it's tested here. The volume is drying up appreciably, which is demonstration of absorption. And you can see this just beautiful jump up and out, no ability to be able to correct here. This is called a backup to the edge of the creek. Here's our backup, jump across the creek. Here's the upper creek, and then really nice uptrend into another reaccumulation. And look at here, look at the volume on. So this looks a lot like our schematic. See this, how it's like sort of meanders down towards support? Well, look at the volume all the way through there. The volume is just really low. And so all through here, we have evidence that, especially look at how difficult it is for the market to go down here. And compared to these, this was the flash crash, and then another big drop. And they're very sudden and dramatic. And then here, all of a sudden, this grinding decline, which is real quality evidence of absorption being nearly complete. So.
We did have a quick question, and that would be if you have any stocks on your current watch list. As far as looking for this reaccumulation, do you have anything that you're watching right now?
I always have a lot of stocks that are in some stage of a reaccumulation. Now, that's a good point, because maybe in future get-togethers, I'll try to have some stocks that we can put out there for people to look at. And so today, especially being that I'm on the road, I probably don't have the best list to be able to offer. But I will do this in the future. It's a good question, and we'll promise to do this.
All right.
So, but this brings up an important point, and that is that reaccumulations and distributions start pretty much the same way. They start with an acceleration into a buying climax, a great example here with Apple, and then a big automatic reaction drop. And oftentimes people interpret reaccumulations, especially at the beginning, as distribution. And the difference is, as you get towards the completion of reaccumulation, that you have these qualities or characteristics of absorption, where, and you can see that down here with Polaris. You can see that as you go further and further, that it just becomes duller and duller before it takes off. Well, in distribution, and let's just go up here, distribution, you have the same start to the structure, But what happens is that as you get deeper and deeper in, the volatility remains high, and often it becomes greater as you go further into the distribution. And so this is important for us to know, because first of all, we want to be trading these reaccumulations. But the other thing is that we don't want to mistakenly interpret a reaccumulation as a distribution, because we know that that can be a really painful trade, especially if somebody is inclined to trade for declines, meaning that they're trading puts or short selling. And so we want to have good methods for being able to make the proper distinction, because both of these start the same way. So,
I was just going to say, if you're looking at a stock that's been uptrending for a while, say on the left side of the screen, and then it starts into one of these reaccumulation phases, we'll make the assumption that this one looks good and that you're looking to enter the stock. Are you trying to enter the stock as it pulls back with the lighter volume near support within that reaccumulation phase, or are you looking for confirmation on the breakout before you want to enter into a stock? What's the Wyckoff approach there?
Excellent question. And I always think of a trade as sort of being three tranches or three entries. And so building a position, but different Wyckoffians have different approaches to this. But these are the classic places to initiate a trade. Now, not to say that we don't occasionally misinterpret a condition and go in at the wrong time. This is just part of trading. But ideally, classically, we want to, in this example, we would want to enter on the turn off of this meandering decline right here, which is the turn up. My little mouse is stuck. So anyway, right here. And so we would look for that the first good bar up that shows strength, and in the question you asked earlier, Tom, increase in volume. So the volume is coming in on a good bullish bar as it's turning. And so we would look at the first 1, 2, 3 bars off of that, and we would go with that strength with the intention of being able to participate in the rally up to resistance. So there's a tranche. The second tranche would be on the pause, because we showed examples of how that there's no pullback when you get a really strong market that's or a stock that's been absorbed into strong hands. And so you can see here in this example that it just pauses at the resistance area before it starts to go up again. So what we would do is we would attempt to trade the first 1 or 2 good demand bars, bullish bars with volume, as it turns off of this area right here and starts to go up. So like right here. Okay. And then a third place would be right here. So so here, and we just keep averaging up winning trades. So we would only buy more if our prior position was at a profit, and then we move our stops on the entire position as we go up.
Okay, so you're looking for confirmation of what you originally thought was going on with the stock before you add positions.
Right. So, for instance, here with Amazon, we have a nice test, and so here we have these really nice bars with good volume. So we might trade this bar. We would trade this bar. And then here we have that pause with no ability to be able to correct. And then we have a really good jump. And so we would trade this bar out, and we could trade this bar.
Okay, Cool. Well, I tell you what, we're going to move into the 10 and 10, but what I'd like for you to do, if you don't mind, is kind of watch and see, and if there are any of these reaccumulation phases on the stocks that we go into on the 10 and 10, if you could mention those, you know, as we're going through, I think that would be really helpful for everybody.
Terrific. And also my ChartCon talk, which I just submitted my title, is going to be basically on the classic, the best entry places for a trade and where to place stops. And so that ChartCon talk is going to be exactly on what we just now talked about.
Yes.
Very cool.
And everybody should know, I mean, you can, like I said to everybody yesterday, I am assuming all of our viewers are going to watch this broadcast online, but you can come and meet Bruce, talk to me, talk to Tom as a VIP if you come to our event. And then are you going on the cruise after, Bruce?
That's my plan.
Yes.
Absolutely, yeah.
And then you get to have a week with us on a cruise ship if you want to add that as well. So it's just a great event. I can tell you some of our VIPs from our 2016 event, conference can certainly vouch for the fact that it was just a great time. And I always love rubbing elbows with all of those tech titans, as we call them, and get a chance to get their view on the things that interest me right now. So it's great.
Absolutely. Absolutely.
Yeah. So if you want to go online, the link is right there on your screen, and there's more information about the different VIP packages if you're interested in actually coming here. Going to Seattle, I would say everybody wants to come to California, but it's not here. It's up in Seattle. So hopefully we'll see you there.
Yeah, and I would just say, you know, I've been out to Seattle, I guess maybe 4 or 5 times now, and it's actually one of my favorite cities. I mean, great restaurants, you know, down around the market area. There's so, and I guess I better mention that's where Starbucks opened their first store. So of course I've been there, right?
Well, and I love the wineries. I'm a wine freak, and not because I know a lot about it. I like to drink it, and they have quite a few wineries up there that are fun to sort of hop around to as well. So,
have you guys noticed that? You know, I've been in the times I've been to Seattle that it never rains. I think they just tell us that.
Yes.
It rains when I go there, and in fact, we got snow at one point. So I figured it was Seattle trying to impress this Californian when I went up there.
Bruce, I think I've been out there now a total of 15 days, and I have seen sunshine 15 days.
There it is.
So now I will say that, you know, their summertime, their July, August time frame tends to be, you know, they tend to have very little rain, very little precipitation. And that's the time that most of my trips have been, because they've coincided a lot with ChartCon, which has been, you know, typically in August. But I did take a trip out there with Aaron and Greg, I think a couple of years ago in May, and I was out there for 3 or 4 days, and it was beautiful. And everybody in the office kept saying, well, you know, this isn't normal. I'm like, I don't even want to hear it. This is all I see every time I come out to Seattle is sunshine.
Exactly.
So anyhow, all right, well, we got this 10 and 10. Let's, why don't we get rocking and rolling with this? And again, if you can, you know, chime in, Bruce, on any of the charts, you know, if you think it looks kind of interesting, I'll try and go through pretty quickly to annotate, but I'd love to get your thoughts if you see anything interesting from a Wyckoffian standpoint.
I'm here.
All right. Aaron, did you want to look at the RRG first?
No, I wanted to do that, but I didn't get all of the symbols typed in. So we're just going to go out here on the fly, and we'll start with gold miners, ETF, like we said we would, GDX.
All right. Well, I can tell you again, I'm not a big fan of gold, only because it's not outperforming the S&P. It's not that it's, you know, doing anything horrible on the chart. You can see the GDX had a nice move to the upside. I don't like this failure at this point to hold on to the rising 20-day, which it had been doing for quite some time. So let me just put in a couple of arrows just to kind of highlight the fact that each time we pulled back, you know, we had a nice PPO continuing to move higher, putting in higher highs, suggesting that price momentum is accelerating. And when that's the case, I look for these pullbacks to hold that rising 20 period moving average, or in this case 20-day. But here we got a very bearish engulfing candle at the top. And it looks like we have a slight negative divergence on the PPO as well. And now we're failing to hold that 20-day moving average. So short term, I'm a little bit bearish here on the GDX. And again, I'm not going to pull the chart up, but one thing that bothers me is if you pull up the GDX and type in $$ SPX after it, it'll show you, and then pull up a long-term weekly chart, 5-10 years. And what you're going to see is that this has been underperforming the S&P 500 for the last several years, and that relative trend line is not going up. So a lot of this moved to the upside recently. It looks good, but it's really not moving up any faster than the S&P 500. So for me, it's not a great trade.
All right. Lots of discussion about Apple this morning in the chat room. So I suspect we really should look at Apple.
Yeah, Apple reports after the bell today. I'm sure most of you know that. And of course, that's going to be a widely anticipated report. You can take a look. Apple has been struggling. This may be one of those instances. I'd really like to hear your thoughts on this one, Bruce, in just a minute. But when I annotate this, I see really good price support, recent lows and gap support all coming in at about this 164. 7 area, and we went just below a couple of days ago, and now we're starting to move back higher. A lot of these tech companies have been reporting excellent results, big beats, top and bottom line, and I'm just wondering if maybe this selling on Apple is just a little overdone. I'd be interested if you had any comments on this one, Bruce.
Well, one thought is that it looks an awful lot like a potential reaccumulation candidate. And so we can see the things that stand out to me is that the November decline has a lot of volume as it goes down. The volume tends to dry up at the low, the test of that November low in early December, and then it rallies up. Not a great rally, not a rally of really good quality, and then again it comes back down. There's a gap there with volume, but to a higher low, so that's encouraging. And then the next rally up goes to a slightly higher high, but look at the volume that comes in off the peak there. And so this, I think, says that there's latent supply still there. That supply has got to be worked through. I'd be very concerned about Apple if it doesn't show the ability to get above your support line there, and so, or it gets above it a little bit. But I would want to see a good rally that at least gets up to the these 3 peaks before the upthrust that we got just at the end, and then it's probably going to have to come back down again. If it's accumulation, reaccumulation, it's going to have to come back down and try to retest these lows at 162 because there's so much volume into that area.
Yeah, I wanted also to add this other price support level because I was going from the gap support, but actually there was a breakout back in the end of October above 164 or so. And you can see that after we broke out, we did put a long tail. We went down and we tested that area of support, and you can see that this recent low did it as well. So it seems to me like we've got a pretty key support level on Apple between about 164 and 167.
Yeah, so it looks like unfinished business to me.
Okay.
And, and also if it stays in the bottom third of this decline and doesn't show some resilience and get back up, say above those moving averages, at least temporarily, that would suggest that it's somewhat vulnerable. But I continue to believe that it's sort of the psychology of the market is such that Apple, I think, still has the potential to become the first trillion-dollar company.
All right, so when you say vulnerable, in Wyckoff language, would that be up a creek without a paddle?
Yeah, right. That was it. The creek ran out of water.
All right, what do we got for the next one, Aaron?
Okay, our next one I think has a really interesting pattern that Bruce could probably comment on, and that is BBG.
BBG. All right, Bill Barrett Corp. Well, definitely trying to hold on to some support back in December, but let me annotate here. Yeah, I mean, I would show, there was a recent low, here was the breakout, and after the huge move up on heavy volume, you can see, and there was a gap down in here with some pretty big volume as well. Looks to me like we just got to pull back into a support area. We're sideways consolidating. Actually, today's volume isn't too bad. I mean, we're currently at about 1.8 million, just past the halfway point of the day. So it looks like today could be perhaps the heaviest volume that we've seen in maybe in 2018. And it is trying to break this little this little downtrend that we've been in just under the 50-day moving average. So I would maybe be watching the recent reaction high. And if we can get this, increasing volume and get back through about $5.50, I think this one's starting to show a little bit of bullishness. But you see anything on this one?
Yeah, I kind of I agree with you. And this meandering decline looks a lot like a creek to me. And notice how the volume really throughout this all the way down to the low is really pretty modest. So there's not a lot of selling pressure as it goes down. And then the high volume comes on the low bar. So go ahead. No. So I just think that that's constructive. And then your point about you're getting a turn off of that. We have a couple of good bars here. This could be the jump that jumps this with volume towards the prior resistance area.
And I know you're not making any recommendations, and we don't either. But if you were looking at this stock and you were waiting for confirmation to make your trade, would it be a breakout above these prior highs, or are you already interested because it's breaking this downtrend line?
Interested on the turn.
Okay.
We're now this resistance area is pretty close here. Most cases, the resistance area is quite a bit higher away. So it might just be good judgment to wait until it does jump above the resistance line that you've drawn there. Okay.
All right. What's next, Aaron?
Okay. Next one I have for you is for our Canadian friends in the energy sector, CVE.TO, and that's Cenovus Energy.
All right. Well, again, I'm looking for outperformance. And if you look at this, I mean, with a fairly strong energy sector, I'm assuming by the title, and I think you said it was energy in the energy sector. I'm a little concerned that it isn't performing any better than it is. I mean, it topped back in November, and you can see from there we put in a reaction low that really didn't hold on to these prior lows. Maybe that's acting as a little bit of a spring that, I'd like to get Bruce's thoughts on in just a minute. But for me, it's just sideways consolidating. You see the volume starting to pick up again on this selling. It's just not acting very well in a market that, has been favoring energy stocks for the past few months. So any thoughts on this one, Bruce?
Yeah, I definitely want to be focused on the stocks that are energy leaders. And in this particular case, if there's sort of a lesson in this one or a concept to emphasize, it's notice how there's sort of these off the December rally off the December low. First of all, there's volumes expanding as it goes into the low, and then it starts to rally. The rally has sort of a climactic surge in early January, a couple of big bars on volume, and then it goes up and has another climactic surge. Now, we would assume, just as we see volume come in at the low, there's demand in that. Well, there's supply in that big volume surge into that final high that we see in kind of mid-January right there. And that comes on volume. Has a climactic quality to it. And then you get a break and then a rally that's a test in late January. So this is obviously on a very small scale because of the time frame. But this test, which doesn't get back up to the highs, suggests when it turns off of that first red bar, even though it's not on a lot of volume, that that this has some distributional qualities to it, and to expect more weakness as it goes back down. Now, I guess the one thing we could look for that's a positive, a minor positive, is that the volume that is coming in as it's getting later in this decline is lower than the volume on the break into mid-December so far. That doesn't mean it become more so the case, but a good rule of thumb to emphasize again is that when you have a decline with volume that it's going to get tested again later. And so here it is. The December decline is being tested again later.
And I would just maybe add and see if you agree, but if we lose that low from December, especially if the volume is fairly strong, that would be a really big red flag for me.
Absolutely. And notice how this whole thing going all the way back to September has sort of a distributional quality to it because, and we'll get into this in our next session, is that the volatility is increasing as we go deeper into this. And so look at the volatility from early November to mid-December. That's a big volatile decline. And now we're getting volatility again. So this, I think, supports your point.
Yeah. And I don't like to see those 6 red candlesticks. To me, that just looks like a lot of selling without too much buying in there, and with the volume expanding the past couple of days. But why don't we do 1 or 2 more of these, Aaron, and then we'll move into anatomy of trade, because I think those will also give some pretty good insights into the Wyckoff-ian approach, because I know Bruce is going to be with us for that as well.
All right. Sounds like a plan. The next one I have for you is Illumina in the healthcare sector, ILMN.
Yeah, this is one of my favorites. I know that big red candle on heavy volume is, a little bit bearish, I guess, in the near term. But I actually think this stock needed a little bit of a pullback. I would look at a couple of areas. Number one, you've got gap support from the latest earnings report. You can see the big volume that came in with earnings, a nice, huge move higher. I think you've got gap support and the rising 50-day moving average that comes in almost together here. And ILMN, for me, the PPO was already starting to roll over. And so this gap up and failure, to me, just indicates that probably the earnings was built in to the price. So the market was anticipating strong results. We got those strong results. I believe Illumina beat on both the top and bottom line, but I'd have to go back and double check that. I do think that they beat on the bottom line. I'm just not quite sure about the top. But anyhow, this pullback here after the latest gap up, I think, is presenting an opportunity. I like it at gap support.
All right. The next one.
The only thing I would add is you can see back in December, there's that decline, and then it becomes real dull into late in the month. And that, to me, suggests that the stock is in strong hands. And so you can see this really nice jump, pivot off of that and jump out, makes a new high. I would not be too concerned yet about that big red bar that we just had. The volume is a little bit high, but it's not as high as some of the preceding bars. And so oftentimes at the end of a reaccumulation, and this may not be the end, but is you get a spring. And so a spring is not an uncommon thing in a reaccumulation. And so I would want to see how this trades, because this could very well be a spring on earnings news designed to shake people out of the trade. And I'd want to see how it behaves from here. And the other example of that, which, the sort of different CEOs have sort of a playbook. And so they have sort of a character to the way they trade. Look at late October. Late October, you have a big bar. So where it goes down, it has somewhat of a tail. But notice that this has sort of a spring quality to it. And ultimately, every low thereafter is higher.
Yep. You can see a nice trend. Yep.
Yeah, so that could be part of the CO playbook for this stock.
Okay.
All right.
Why don't we do one more?
One more? All right. Number 6, let's do Mazor Robotics, MZOR.
All right. I really like the action these last couple of days with the volume picking up. I see maybe a little bit of an inverse head and shoulder, maybe a little bit of a cup. But let's just draw a line across here first from that high that we saw back at the end of October. And you can see, I could almost maybe draw another line. I could maybe look at this as a left shoulder. This would be the left side of the neckline, come down to a double bottom for the inverse head, come back up, establish the right side of the neckline, pull back, test that right shoulder with a 20-day test, and now move to the upside with expanding volume. Today's volume is particularly heavy with 625,000 shares traded. a little bit past the halfway point of the day, so we may get 1 million shares today. And when you look back, 1 million shares is a pretty decent amount of stock on MZOR. So I like this breakout. The PPO strong. I think it's in a bullish pattern, continuation pattern that it went through for 3 months off of this uptrend. And so I think this is resuming its uptrend. I'm bullish on MZOR.
The only thing that I would add here is sort of the early December low, which there's a rally of sorts, and then a test of that, which appears to be a spring. Look at how tight that last down bar is. So even though it's down, it's a compressed bar, and the volume is not as high as it was on the decline down into the early December lows. And so this whole decline has sort of a creep quality. Look at how it sort of meanders down, and the volume is just not that good. I know it's the month of December, but then look at the turnoff of that. So this is sort of a little bit of a complex structure for a reaccumulation, but it's definitely, that's what it appears to be. And look at how well it rallies off of that test, tight bar test, good demand bar, and then a nice run up to up and out. So I think the next thing to look for is a pause here where it can't go back in to the reaccumulation structure, and that would be, and then look for the commitment to turn back up off of that. And it could be just the beginning of an important move up.
I agree. All right, why don't we, Aaron, why don't you go ahead and after we go through the quick summary on the 10 and 10, go ahead and do a quick market update, and then we'll come back to do the anatomy of a trade. We'll let Bruce give some thoughts on that.
Absolutely. Sounds like a plan. And there you go. Those are the 10 and 10 that we covered today. Obviously, with Bruce here commenting, we didn't quite get all of your requests, but
we did more this time than last time.
Yes, that's true. And I'll put the ones that we didn't get to in the queue for tomorrow. So
I'm getting better.
All right. So for our final market update, let me get here and share my screen. Oh, wow. It worked the first time I clicked. That is always nice. Okay. So, and you can see our blue banner here for ChartCon. So if you're not sure where to go, I'm pretty sure it's on all the pages for a little while right now. So anyway, we're going to start over here with our candle glance. Let's see where the markets have been going since we've been enjoying ourselves talking to Bruce. Go click there. Here we go. And I always change this one to the TSX for my Canadian friends there. And there you go. I mean, I was getting all of these messages this morning on my phone talking about this big decline that was going on in the Dow. And of course, we did get a difficult decline earlier, but we're racing back up. And I see these flag formations on the Dow, on the S&P. I like that. That tells me to probably expect, I would expect some more upside out of that. Small caps doing fairly well. I mean, they were down with the major market, large cap markets, but also making a move back up. And we can see TSX, I'm afraid Canada's not making that bottom and moving back up to the positive right now, flirting with intraday lows for the TSX. Treasury yields are up today, and we can see UP steady decline. Moved back up here, might be a reverse flag situation here, still bearish on the dollar. See commodities are up, but likely due to the fact we're looking at a nice gap up and now mostly consolidation move on USO. Gold was down, but has been spending most of the day just consolidating sideways, so not too bad there. GLD reading 127.42. And look at the VIX, really trailing off right now. We had some nervousness for sure yesterday. We were getting some very high readings on the VIX, but it's starting to pull back now, and we're seeing a little bit more complacency. I would expect this might make things a little bit more ripe for a decline. And we can see advances and declines pretty much even. Take you very quickly, look at our market summary, and then we'll go into anatomy of a trade. And I'll make this percent change. And as we can see, sector spiders, financial and energy still leading the way. And materials and utilities are the laggards. Consumer staples is now dropped into the negative. but down only 1 cent currently for XLP. U.S. industries, oil services, broker-dealers, biotech sitting at the top. Oil services up almost 2% right now. And we can see REITs, utilities, chemicals, all the laggards, all fallen over 1% for the day. And international ETFs, Mexico is leading the list, EWW, with an over 2% change to the upside. And we could see South Korea and India are the laggards as far as our international ETFs. I can see about a third of the international ETFs are down today. And with that, I'm going to conclude our final market update. And yes, we have a very short period of time for anatomy of a trade, but I'm ready to go if that's all right, guys.
Go ahead, do one.
All right, let's get over here. All right, so I'm going to take us in, and I went back in time, and I've determined it's a lot more, it's easier to explain if we do it time lapse. But I promise, guys, I'll go pretty quick here. So I picked one that I would have come up on my scan. Nice positive bullish confirmation here with rising PMO bottoms, price bottoms. So I'd have gotten in right around 90.62. My target would have been right up here where the top was in August, and my stop would be just below this area of support. So that's where I want to sit since I'm right in the middle of the trading range currently. So that's when I got it. This is time lapsed here. And now we're into 3/4 of the way into September, and my target was reached. And so now time to determine what I want to do. Well, I like the volume on the move to the upside. My PMO now has positive crossovers, continuing to move higher. Look at the improvement in the scooter. So I would be changing my target probably to around 96.50. I mean, I've been moving, I would move up probably in like $3 to $4 increments on my targets. And my new stop, I would put around 91.25. So right about here, probably at just a little bit above what I actually bought it as, because it would be nice since I got this jump to at least pull out a little bit of profit if it pulled back a bit. Next time lapse, and boom, I hit my target again at 96.50. So my new target, I would just move it up about $3, 99.50, and now I got to set my new stop, and how wonderful, I get to set it on this very strong support line here. And so that's where I would continue with that. Next. All right. My target got reached again. So my new target, I'm going to just add 112. My new stop, I've just moved it up to this new area of what was previously overhead resistance. Next up is when I finally sell it. We ended up with a really bad down day. And while it did not hit my stop, it would have obviously come into my radar. I would be paying attention to it because I own it. And after seeing that penetration of the 20-day EMA, I would sell it right then. So I'd be out right around 98.24 with a gain of about 8.5%. So that's really and then you get these confirmations. So if I wasn't sure if I wanted to sell it because it is sitting on that support area, I would see this PMO, I would see that scooter and be out. So.
All right, sounds good. Bruce, do you have, what's that?
2 minutes. I got that done, I think, in 2 minutes.
There you go. If you have anything you'd like to share, Bruce, feel free.
Bruce?
Can you hear me okay?
Yeah, yep.
So I was going to, I do have a trade that we can look at,
Okay.
but I think we're out of time. And so maybe we can just do it next time.
Mm-hmm.
But yeah, go ahead.
Okay, well, if it's going to take you a little bit longer, what I'll do is I'll go ahead and share the screen. I just have a couple that I go through really quickly.
Oh, sure.
And so let me just, and then when you come back next time, we're going to have you do two things. One will be to share your scan, and then your second one would be, or the second thing that we would love to hear from you about is a trade, something that you're looking at in terms of a trade.
Sure. And then also, I'd love to do some introduction to distribution.
Okay.
You just sort of keep going through the cycle, you know, accumulation, reaccumulation, distribution, et cetera.
Okay.
So we can introduce that.
Okay. This was a recent trade that I had with IBM. First of all, I like to trade stocks that have beaten top line and bottom line estimates with their latest earnings. And IBM fit that category, had made a huge move up. And anytime I get the PPO rising like this with the price action, I look for a 20-day test. And actually, I got that back a little bit more than a week ago, maybe close to 2 weeks ago on IBM, got the 20-day test. And actually, I got out of this and got back in yesterday. So I got out as it got close to gap resistance. You can see as it moved back up, check out the volume dwindling. And as a result, I just didn't want to take a chance. So I only held this stock for 2 days. And then on the pullback, I've gotten back in at the 20-day moving average. And right now I'm just holding probably a move back below about maybe 161. And I would consider certainly 160. You can see this major price support level coming across here. But 160 to 161 would be an area where I would consider a stop. And my target's going to be anything back up in that 168 to 170 area. So IBM was one. I actually just bought a stock earlier today, and it is Beazer Homes. Now, I'm going to get into this one in just a minute, but before I do, I want to show you the home construction index, because I actually went looking for a home construction stock because, as I mentioned earlier in the show today, the DJUSHB came back down and made a very big test of support at the rising 20-week moving average. So as a result, I went into my strong earnings chart list, and two of the stocks I had in there were KB Homes and Beazer, BZH. And BZH, after coming back down, and this is a little bit Wyckofian, but I assumed that this little move here recently with the home construction index hitting support, I'm using this as a spring. So I did actually throw a little Wyckoff in there for you, Bruce. But the support area you can see was from back in mid-December, just around the 1875 area, and we went just below it with the home builders pulling back. But notice we didn't have a big red candle below. I think we gapped down, and I think this is setting up for a move to the upside. So I like Beazer Homes here. I will keep a stop at the 18.25 level, maybe a little bit below today's low is 18.14. So any move back down there, I would be a little concerned. But I think initially I'll be watching for about 2060 to 2070. Ultimately, I think this is going to go back up to that 2250 area.
Nice.
And that's all I had. So now we can do a quick summary of the anatomy of a trade. So Aaron took a look at the JP Morgan. I looked at IBM and Beazer Homes, BZH. And next time, we've got Bruce promising that next time he will have a trade that he can go through. And I think with the Wyckoff approach, it is going to take a little bit more time to explain the different levels. So I can appreciate that. But you're definitely going to be coming back. We're not going to let you go without promising that you're going to come back and join us again.
I'm coming back. And when we do get into some sort of live trades, it starts to really become more evident about what's, how to do the find the pivots and so on. So we'll get there.
Yeah, and I think the live trades too. I mean, when you're pulling up the information, there is an emotional element when you're trading. I mean, when you've got your money on the line, there's definitely an emotional element that's hard to quantify. But as you're making a breakout, and then all of a sudden intraday it pulls back, and then you're questioning, well, was that the right move? Wasn't it? And so it can be a little bit harder. So I'd be really interested next time you're on to go through not only the scans on how you find stocks to trade, but an actual trade, so you can maybe discuss some of the mental side of trading too, while you're going through the various phases of Wyckoff.
Look forward to it. Love it.
Excellent.
All right. Well, there it is. Another great guest, another great appearance by Bruce. We certainly enjoyed having you on here with us today, Bruce, and I'm sure our audience did as well. And I guess we can go through some of the announcements, upcoming things that are going to happen, Aaron. And
yes, weekly schedule. So tomorrow you'll want to come back. I'm going to show you how to sift through your scan results. And Chip Anderson will be joining us, president of Stock Charts, on Tuesday. And then Gordon Scott will be our guest. He's from the CMT and Investopedia, and he will join us on Wednesday, February 7th. And with that, it's time to close it out.
Yeah, awesome. As you can see on the screen, we'd love to get your comments. If you go take a look at the lower right-hand part of your screen, you'll see how'd we do. Just a very brief survey. We'd love to hear what you think of the Wyckoff approach, some of the things we talked about today, and just the Market Watchers live show in general. We do listen to your feedback, and we do try to construct future shows based on a lot of your feedback. So we certainly would love to hear from you. Thanks again for tuning in. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from 12 to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody, and we'll see you back here on Friday. Happy trading.